Hey guys, Martin here. Just wanted to come up with another update on the markets on Friday the 13th of March. I'm outdoors. I am actually at Gosford Golf Club, not because I had a round of golf unfortunately, just because I finished up at a prezzo talking about the share market, what's happening in the globe, which is timing given what's been happening the last couple of weeks. So just want to give you some highlights from the experts and what their thoughts and opinions are, which I'll just jot through now. Basically, the whole share market, the coronavirus thing is different to some of the things we've had before, whereas the GFC, that kind of stuff, has been a financial-based drama. This is a health-based issue. So it still has a concern. There might be a flow-on effect, but it's not the same kind of thing in the fact that companies aren't going bankrupt, the debts are there, all that kind of stuff, it's the same. This is a different thing. It's a health-based issue. So once that health-based problem goes away, then the markets can more quickly return to normal. We'll figure out what that normal looks like. So, as I mentioned in the last videos, the market always factors the worst case, and that's what they're doing here. The pandemic, which has been announced the last few days, it's going to take over the whole world and everything like that's going to happen. The noises around there. So, we've already seen that happening, and it's going to continue to happen because it's just unknown in terms of that space. What we are seeing from a health perspective is that they think that this potentially could go on for 3 to 6 months from a health side. Therefore, the market's kind of trying to factor that stuff in and going, well, if things slow down and people can't travel, that kind of stuff, what does the world look like for the next year or two? And if it goes for that long, well, let's price that in now. If it doesn't, sweet, well, when we know that, we'll bounce back. And that's what the market's trying to do. From a financial point of view, from a valuation point of view, the market is back and below basically its fundamental fair value. What that means is, from a fundamental point of view, in a normal market, it is cheap. Doesn't mean we need to rush out today and buy some shares, but it kind of gives us the confidence to go, well, this is normal, unnormal. When we have some confidence about what's going on, it will return, at least bounce back in some respect for sure. The market will continue to be volatile. We'll see those swings over the next 3 to 6 months. There's nothing that's going to change that. What the market does do is it just uses the information it has now and predicts about what's going to happen with that. And as we see more information come out, it'll try and predict that. But what it always does is it goes to worst case scenario. So once we have some good news come out, which could be any day now, you'll see the market take that and be volatile. But normally the market goes up and down like this and we don't really even notice it over time. We're doing this, that kind of thing. That potentially the volatility could last for a few more weeks, a few months, and then we'll start to see normal. We won't see swings of 2, 3, 4, 5, 6, 7%. It'll be 0.5% or 1%, that kind of thing, which is what we want to do. As always, the market is going to overshoot. So people just teeing up behind me, making sure they're not hitting me, and always predict the worst case. In terms of cash, catch rates are low. They're the lowest they've ever been. They could go lower. So Australian RBA rate is at 0.5%. They're predicting there's a good chance of being another drop in April to 0.25%, depending on what Mr. Morrison's stimulus that he announced recently takes hold, and could go to zero. Around the world, rates are already at zero, some rates are negative. So what that means is there's no return elsewhere. So if we take money out of the market, we go sit in cash, we can't go get a 2, 3, 4, 5% term deposit we could before. It's getting nothing. Inflation, the world spending goes up. So that's not a long-term investment strategy. We're not going to get a return from that. It would really only be for safety, and that's about when we re-enter the market, and there's just way too many risks involved with that. I don't have any of your money invested that you need right now, so what we're really trying to focus on is what are we doing in the long term. And as I always kind of say, we make money in the share markets one or two ways: the growth, the value of the shares, or the income. These companies are still making profits, they're still paying dividends, therefore the income still kind of come through. If we go take money and put it in term deposit, it's going to make 0 or 0.5%. So that's not going to be enough to live off. There's people working on cures and that kind of stuff around the world that may or may not happen. If that obviously comes out, the market will recover, but we still don't know at this point in time. What the market's really foring is to wait until we kind of seeing less cases. In China, they've already slowed, they're not growing anymore, based on the stats that these guys had, but they are still growing because it's spreading around the world. We're seeing Italy, Europe, USA, that kind of stuff, potentially even Australia. Because that improvement in China, the stats are that the Chinese factories are growing back up. People are going out, there's more cars on the roads, all that kind of stuff. So we're starting to see that improvement. They think within a month, China will be back to full production based on that. So that will help kind of that. From a Australian point of view, we might hit a recession. It'll be a technical thing. But again, they think it's a temporary thing. They don't think that this is going to change the underlying profitability of these businesses. It's a short-term temporary thing. It's a scary thing. I don't enjoy it. I'm sure you guys don't enjoy it. But the actual underlying companies that are there, it might take a hit to their profit for a month or 2 months or 6 months, but it's not going to change the way business is done. In fact, it might improve the way business is done because we might be less reliant upon China, but that'll come out in time. So I'm going to record another video talking about valuations and that kind of stuff separately, but hopefully this made sense. Talk about the market, key updates. These guys know what they're doing. There's a good 5 or 6 points in there. And consistent with what I've been saying, but it's always good to hear this from the experts.